Okay, this is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy, and this is your training video 19, spotting key reversals. Now, this is crucial, guys. This is one of the most important videos you'll probably watch. This is something I do a lot, something that I like doing. I like actually outsourcing. I like researching these charts for these opportunities, and something that happens quite a lot. It's not something you've got to trawl through tens of charts and just find one opportunity a month or something like that. With all the pairs that we trade, we typically trade a good 5 to 8 pairs solidly. This is something that happens fairly often, but when it does, again, like the swing trades, you can catch them in a way. They are sort of swing trades, but just reversals in themselves. They have not got to come from head and shoulders. They've not got to come from double tops essentially, although they do. They've just got to come from, again, just low points or high points. But there's a certain way you catch an eye for them as to see if they are indeed that key reversals. So let's take a look at a few examples. I've also got one gold example as well. I've got them up here, a list of 4. So we'll check out first off dollar yen. Now, when assessing these key reversals, obviously everything else you've learned up till now you can look at on 15-minute chart, 30-minute chart, 1-hour chart, whatever. But this key reversal I like to spot through a daily chart. This is crucial, a daily chart, and then you can zoom in and then go back to lower time frame charts to look at current present candles, and if they also marry and confirm what you've already looked at on a daily chart. But the daily chart is crucial because it spreads out, because this is something that could move quite significantly over a period of days. Again, it's something you want to look at on a daily chart. So we've got your daily chart. Now let's zoom in. Here's a recent example on dollar yen which showed a good reversal confirmation. Now, as you can see here, the chart runs over several months. It runs from last year, so this is running over a year, actually, a year old, this chart. And it kind of looks, well, we've rallied up, we've come off, we've come up, consolidation. Now, if we zoom in to recent price action, this low, we look at where we've sort of bottomed out. Now, you can see a triple bottom here, yeah? Now, we've seen 3 bottoms. Don't say that very often. And this is a significant level because we rallied up through this level quite harshly back this time last year, actually, middle of October 2016. Well, one was just before the election, and just after the flash crash that was seen on the pound as well. Since then, we formed a sort of a base here. Now, recently, end of August, beginning of September, this was seen. Now, again, the recent bottom on this sort of level, 108.50. Now, where you spot a bottom here is quite simple. This market sold off, came to the bottom of that line, that bottom support line, and made one final candle lower. But here's what is interesting. Here's where you see good turnarounds. The next candle was blue, and not only blue, it made up for the difference of the last 2 candles. Now, to spot a decent turnaround or reversal, generally the next candle, in this case the blue buy candle, because obviously it's reversing from a selling perspective. This is a blue candle because it's now moving up in price. This is called an sort of engulfing bar. Actually, this is not a candle chart, this is a bar chart, sorry. This is an engulfing bar, meaning it engulfs and takes over the previous red candle, but it also engulfs the previous red candle again. So it actually makes up the ground for the previous 2 days. So we've got 2 previous days of selling, 2 daily bars of quite decent selling, well over 150 pips. But what we've got here is a reversal. We've got 1 whole bar taking out 2 previous heavy selling bars, and then the confirmation comes when we've got that second bar of actually on top again. This is not just a freak reversal or a suckers rally. This is something that is then extended into the next day and again has made up for more ground again from here. So that's a good indication of that the fact we've actually seen the low and we're ready to sell on. It doesn't tell you how much you're going to go on to see rallying. It doesn't say, well, it doesn't confirm that you're going to go on to see moves of 200, 300, 400, 500 pips. It doesn't say, well, we're going to rally, you know, towards 115 here. You never know that. All you know is you've pretty much seen the bottom for a decent period of time. That's all it can tell you, is that the bottom is in. Now we're going towards higher levels. That's a case for you to then trade, place a buy, and to then make your own sort of profit target going towards previous highs and taking all that into consideration. But it's just telling you when the bottoms are in, when these turn points are in. Now let's have a look at one on Aussie yen. This one is quite live. I actually like this one as of 4th of October 2017. Now what we've seen here is pretty much a recent double top. It's not a spot on double top, but pretty much up here we see the market where it rallied up to in end of July, beginning of August. It attempted just about beat it in middle of September, and now again we're starting to slope off. Okay, so we're starting to buck this trend. We've got a slight, if we draw a slight trend line, again always look at this on daily charts, guys. You don't get this from any other chart. Sort of here we've sort of hit a trend line here and starting to come off. Trend line we've made from all the previous highs going back to just after the election. Now if we zoom in, what do we see? Again, semi double top, pretty much nearly a perfect double top, and we've seen buy, and again an engulfing candle, one huge sell candle, pretty much nearly takes care of the last two buy candles, daily candles. And again, the second candle, it confirms this is not just a freak sell, it's not a sucker seller, as we say, sucker selling, ready to suck you in, suck more buyers in at a lower price. That's what it could do. But really this sell means business, because the next candle was selling as well, and it then tried to make another high. This was the giveaway, this third candle, because what it tried to do was rally here and make up some ground. It would have rallied at one point, and all it's done now is then sell back off again. It's an even more of a bearish sign actually, that it tried to make higher ground and ended up selling anyway. So we've got the third day is really yard sell signal, and I like this here in and around this level. Below 88, even 88.20 is a nice sell, ready to sell off back down towards, you know, 85, or maybe even lower than that, but definitely the initial target is 87 and then lower. If we zoom back out, you can see really where the targets would be, selling down through these moving averages en route towards 86 and possibly 85. Now let's look at gold. Again, gold here has made a high recently, end of August. Now what the signal here was, and I took a very small sell, got out way too soon. I got out at just above 13.25, because I thought we might see some support there. But what we saw, again, big sell. We rallied up again. This was the telltale. If I zoom in again, we rallied up, made that one final high beginning of September, and on the next candle it rallied up, but on the same day it rallied down. So on that day, the day after it made its original high, it made another high, above 13.55, but then sold off that same day back below 13.45. So it's not engulfed the previous candle, but what it has done, it showed incredible weakness by rallying up to make a new high on that day, but closing lower than the previous day, all on the same day. And again, that was on the 6th. Just on that weekend, and then following Sunday into Monday, it gapped lower, and again, this was the sell signal where it then gapped lower. Following on the weakness from the last trading session, it gapped lower on that Sunday night and lower again. We had an update, small update the day after, but again continued lower, and then it's just gone lower ever since. But this gap lower and this bearish signal here to make a high, fresh high, but also couldn't contain it and ended up selling off later that day. Huge bearish sign, and very bearish sign. What can you say? Now, dollar chief, let's zoom out of here. Dollar chief, dollar Swiss, again, very much, it's very obvious what can be seen here is a lot, very good base of previous lows. We've got our lows here going through, spanning across the chart, well over 2 years actually. And again, look at this level, around 94.40, 94.50 is where the market has tested many times before. And again, more notably this time around, recently, this summer, several attempts on this. Now, where do we see? What do we see? We zoom in again, we zoom in once more to get more of a picture. Now, here's what we've got now. For instance, the very last selling, attempt at selling, would have been here on the 8th of September. Okay, so this would have been the very last attempt at selling on the 8th of September, right here. So pretend you're now looking at the 8th of September. It's all very well in hindsight to say, yeah, well, Matt, you're just going back. You're looking at, you've gone back to look at this. It's very easy to say. Well, of course, but I'm telling you what you can look at on those days and the signs you could see on that time. I missed this, but I've only come back 2 weeks later, and I thought, oh, what a great opportunity. You can't catch them all, but this is what takes the work. I wasn't even looking at dollar Swiss through September. Okay, I only came to see this literally 2 weeks after the event. Just before my birthday, the end of September. So again, I caught this on other trades, just like I was looking at on dollar yen. And now I'm looking at Aussie yen, present day. I'm looking to do the same thing. But it just so happens I missed this. But the sign was, on the 8th of September, when you made one final low, again, you had an engulfing candle, which made nearly up for 2 days worth of candles. Right here, it definitely slaughtered the previous candle. Nearly doubled it, didn't it? And then that's where you had the next candle again made up for the previous candle. So it wasn't just a sucker's rally, it latched onto another day of buying, and we've ended up ever since. So this was the turnaround area, but you've got good confirmation that this is already probably a good base to start anyway, purely because so many times previously the market bounced off this level and has seen a good bounce and a good support base here at 94.40, 94.30 several times over the previous few years. But not only that, when it made that candle here, 2 perfectly good candles, and your entry point wouldn't have been here because you weren't to know, so you couldn't have bought there because you had no confirmation it was going to really rally. You had a good idea it probably would, and then when this started to rally up, you thought, right, we're back in business. But the next day is where you would have looked to get in above 95.50 and thinking, right, yes. Obviously, it came back down, back towards 95.50, but even if you got in around here the previous 2-3 days, you're still only coming back down to where you got in, but then it made up for over the next few days and week or two up towards 97, and really it's going to be testing 98 pretty soon, most probably. So those are things you look at. You start with your daily chart, you look at the picture, you look where the current action is. Do I see a double bottom? Do I just see a bottom in itself, head and shoulders? Do I see just a top? Do I see a sloping neckline? Is there something I can just zoom in, check out? I'll zoom in. What do I see? Oh, I see some bars. Do it with a bar chart. I find it easier than with a candle. Sometimes I switch between the two, but for this I find a bar chart easier. Yes, crikey, pretend this is September the 8th here. You go there and you think, wow, crikey, look at this, made up for it. Here we are. Go back, September the 10th. You see that second bar as confirmation. You think, right, oh my God, okay, we bottomed out here, up, up. Okay, your entry might be 95.60, 95.70. Get in. That's your confirmation. Now the opportunity has passed. Is it still a buy? Possibly. Dollar Chief as of 4th of October. I still quite fancy it, sort of, but it would have to pick up for me above 97.50 again to see some more buying. Other than that, guys, that's pretty much how you spot that. On to the next video.